Hello and welcome to Market Domination. I'm Josh Lipton, live from our New York headquarters. There's just an hour to go now until the closing bell, and stocks are continuing their rally on hopes for an end to the war in Iran. Investors waiting for President Trump to address the nation tonight for more developments from the Middle East. Join me now, got Yahoo Finance's markets and data editor Jared Blickery, and joining us is also Ryan Dietrich, Carson Group Chief Market Strategist. Fellas, welcome both to this show. Jared, let's start with you. Just bring us up to speed on the markets. What are we seeing today?
Brand new quarter, brand new month, and we are on day 2 of a rally. So let's go to the Wi-Fi Interactive and just kind of chart what's going on here. A lot of these markets are having their best 2 days since April or May of last year. So that's kind of an eye-catching statistic. First, here's the Dow. This is what happened today so far, 251 points to the upside, about 0.5%. You can see that we were higher in the day, giving back about maybe 1/3 to 1/2 of those gains. Here's the Nasdaq, very similar chart, but up a little bit more. 1% is the net right now. And then we have the S&P 500. That's kind of in between, up about 2/3 of 1%. But let me just show you what's happened over the last 2 days, because then we're talking about some decent rally figures here, 3.63%. So glad we got Ryan Dietrich here, because I'm going to talk to him about a key technical level that's just ahead on the S&P 500. But I got to go down and kind of give you an overview of what's going on with the market here. So let's just get to the bond market. Here's the 10-year T-note yield. I'll dial this down to another day chart. We are up that is up to 4.32%, and that's kind of a break-even move right there, not even up 1 basis point. Here's the 30-year, it's up about 1 basis point to 4.90%. US dollar index just a little bit down right now. But let me show you what's going on in the sector action, because industrials, tech, and consumer discretionary, so the number 1, the number 2, and then all the way over here at the top right, we have those 3 sectors having their best 2 days since about last April or May. So those are the cyclical trade that's really kind of hot right now. What is not working is the best performing sector of the year, energy, down about 3.8%. It's up almost 30% for the year, but it's giving back some gains on day 1 of the new quarter here. So one of my questions to Ryan is going to be, how much is this rally kind of reflecting that dead cat bounce that we've seen? But we'll get there in a minute. Just want to show you what's going on with the Nasdaq and the Dow real quickly. Here's the Nasdaq 100. Alphabet is a standout, up about 3%. There's a lot of green here, so this is really nice to see, kind of that continuation from yesterday. And if we drill down into tech, here are the semiconductors. Semiconductors have been doing well all year long. Here's Intel, up about 8.5%. Meanwhile, here's software, not looking nearly as good, and this has kind of been the story with software this year as well. There have been some green days, but for the most part, it's looked kind of like this. I'm going to close here with the Dow Jones Industrial Average, and you can see a lot of nice green there. And again, with that industrial trade, we see Caterpillar, that's up about 3%, Boeing up 4%, that just announced another deal with Lockheed Martin. But that energy trade is flagging here. Chevron down 4.5%, and my goodness, Nike down 15%. I think it's down now 30% on the year.
Ryan, get you in here. So as Jared said, green on the screen. We're building on gains from yesterday. What do you make of these markets?
Well, let's hope it's not an April Fool's joke. You think about it. I mean, we are extremely oversold. Not saying any of the listeners don't know. Let's put some context around this, right? The Dow was just up 10 months in a row. One of the longest win streaks ever, obviously just down last month. The S&P was up 9 months in a row on a total return basis, now down the past 2. S&P's down ballpark 5% the first quarter. And it's got everybody all worked up. I like to think of it like this. Most years have volatility, right? And I get the headlines. We get that. But just look at the recent data we've seen just the last couple of days. It's been pretty solid. Earnings season's right around the corner. Forward S&P 500 estimates this year so far up almost 7% for earnings. I mean, earnings continue to go higher. I know the market's down, so quote unquote, it's cheaper. Sometimes you're cheap for a reason. But just one more thing. I like to look at market breadth, get a little technical. I know you're probably asking 200-day. I'll save the 200-day. You can ask me that in a second. But the advanced decline line on the S&P 500 actually didn't make new lows recently, whereas price did. So that's a subtle way of saying maybe underneath the surface, peel back the onion, as I like to say, there's some potential strength there with all the negativity and all that stuff. We can get into that a little more. We're optimistic. We're in the ballpark of probably a pretty decent low here.
I want to ask you about seasonality, because this is something I love. I know you're a great student of it as well, and it gives us kind of a roadmap. And I found it accounts for maybe 1/3 of a market's return. So certainly life can intervene, but I want to go to the Wi-Fi Interactive because you have mapped out the 4-year presidential cycle, and starting in Q2 of year 2, which is where we are right now, and if we get that up on the Wi-Fi Interactive, this is the only negative bar we're looking at in these entire 4 years. So history says this is where the dip is right now. I'm just wondering if that might have been front run a little bit. What your thoughts are on that?
That's what I was saying. Yeah, I think it's a little front run. I mean, listen, the reality, midterm years aren't that great, and we don't blindly invest just in the seasonal stuff. Like I said, it's part of it. But to have that context around things, and just the fact that March has been kind of rough lately. I've called it the banana peel period. February, March, the last 20 years, you've seen some seasonal weakness. So yeah, this is a little more extreme what's happening, but I don't think it's too absurd. The last 20 years, April's up the most, 80% of the time. It doesn't have the best average return, but it's more likely to be higher. But we're still in kind of a little potential tricky area, but I love looking at sentiment. That's the other layer to all this stuff. There's so many ways to look at it. I mean, the last Goldman just had some data from their prime book. Look at hedge funds. Last 6 weeks, hedge funds are selling the equivalent to a 100-year pandemic and the 10% crash after Liberation Day. And right now, this is kind of in that slow motion kind of market. It just won't go down. Why won't it go down? I think because everybody's hedged. Everybody's expecting things to go down. And we have gone down, but we still aren't even in a correction on the S&P 500 yet.
So can you just expand on that Goldman comment that you were making? So how does that relate to sentiment? How are things setting up for the next couple months there? Yeah,
well, you can layer it on clearly the institutions are very worried and they've been selling. And you look at things like put to call skews, how much people are willing to pay for put protection relative to call. That's like the highest we've seen in a long time. On Friday, the SPY put volume was one of the highest we've seen in a long time. The AAII sentiment poll, we had 7 weeks in a row of less bulls than bears. That's the longest streak we've ever had in that one. So there's lots of ways to slice and dice this.
So it's overdone, and yet the market didn't crash.
Yeah, I think if everybody's thinking alike, somebody's thinking. General Patton, use that one a lot. There's a lot of reasons to be worried out there, but I think when you consider the fact that your average year has about a 14% peak to trough correction. This year we've had about a 9%er. Maybe it can get a little worse, but the reality is after the run we've had, this is an awfully lot of fear. And I get it, it's not just a tweet now. There's different things going on clearly in the Middle East, all these. But hey, earnings and profit margins are hitting all-time highs the second we're doing this. That's still a positive in our view.
What about midterm elections, Ryan? How should investors think through that?
Yeah, well, like we said, that is the weakest year historically out of the 4-year cycle. Peak to trough, here's the way to think about it. About a 17.5% correction in a midterm year. That's the most. That's the biggest correction you see in the 4-year cycle. But here's for the listeners, maybe that's the negative part. The positive part, go back to World War II. 1 year off those midterm lows, and I get it, nobody knows when they are, but 1 year off those lows, the market's up 32% on average, never been lower a year later. So if you can withstand the pain now, usually you look up. Another one is from the election, midterm elections in November, whenever that particular date is, but that's first Tuesday in November. You go back to World War II again, 1 year later, market's never been lower. So those are some things to think about if we have a little more trouble here from a longer term investment point of view.
Want to ask you, let's go to the Wi-Fi Interactive one more time. I got a chart of the S&P 500 up here. This is year to date, and this is a line chart. And then this blue line that I'm kind of highlighting right here with my green marker is the 200-day moving average. And we have rocketed higher over these last 2 days. In fact, this is what we're looking at, a 2-day gain that accounts for all of that. And yet we got this big technical resistance overhead. And it's also the 50% pullback point from the all-time highs, which is right here in late January, to these lows that we had just a few days ago. What do you put that, what does that say to you? Do we have to get above that anytime soon? Are you worried about a sell-off from there?
It's a logical place to take a little bit of a pause, right? That 200-day longer term trend line, it can be support, it can be resistance. Like you said, the 50% retracement's also in there. With that, obviously with President Trump, I believe he's still speaking tonight, right? It hadn't changed in the last hour. Okay, I've been running around. And so as long as he speaks tonight, we'll see what that is. It makes sense. The market's kind of still wondering. The VIX, Jared, as I know you've been talking about, closed above 30 2 days in a row. That's something we haven't seen in a long time. Now it's imploding right now, or the last 2 days. So those are some things, again, baby steps right direction. But I did some fun data just real quickly on this. Annualized, when the S&P is above the 200-day moving average, your returns are like 21% on average. When you're below the 200-day, it's negative 22%. Bad stuff happens below the 200-day. We need to get back above that, and I think we will eventually before we get a little more optimistic, I guess we'll say.
You mentioned worries, Ryan. One potential worry for investors, they're watching oil. You got Brent at around 100. You got price at the pump. You jumped from 3 to 4. Can the stock market power through that?
Yeah, well, I think it can. Clearly we need oil to slow down and to stop going up. I mean, that's not saying anything probably everybody doesn't know out there. But you look back at like 2011, 2012, we had really high oil and markets did okay. It's just that volatility. It's like the dollar. People say, oh, the dollar's high, the dollar's weak. It's volatility markets don't like. And this historic volatility we've seen in the oil markets, clearly that's kind of upset the apple cart. But still, honestly, if 5 weeks ago you'd said oil done when it's done, the headlines we've seen, all this stuff, yet the S&P would have a 9% pullback. I mean, that's saying to me the message of the old school John Murphy, RIP John Murphy, passed away recently. The message of the market is there's still something in there. I think that's net positive by the fact that we've withstood so much negativity and everyone's so worried on the other side that maybe that beach ball's under the water, gets some good news, and that ball can go up.
To your point there, you just mentioned profit margins just a little bit ago. So profits and also profit margins. Just tell us about that because you posted a couple charts recently to your X feed, and I believe we have some of those. So just tell us about that.
Well, yes. We like to say the dual tailwinds of this bull market, I've said this for 3 years now, are higher profits and higher profit margins. Since the war started, all right, the S&P 500 12-month estimates on earnings are up like over 3%.
Since the war started.
Since the war started.
Right.
Okay, earnings are up like 3%. I mean, that's kind of, really? But yes. Now, all 11 sectors actually have higher earnings guidance also, but the majority of that, like 90% of it, have come from tech. And I get it. Tech's been the area that's been hit a lot, but like you just said, it's been bouncing back. So there's a positive there. And profit margins, time we're doing this, 15%. All right, they were 12% back in 2019. People said profit margins are too high back then. We've been told year after year profit margins have to roll over. Well, they haven't yet. So profit margins trending higher and earnings trending higher. Those, again, are dual tailwinds that say, listen, this volatility is uncomfortable, the headlines are uncomfortable, but we look back 6 to 12 months from now, wouldn't be shocked at all if this bull market continues.
I'm going to switch gears here. I want to go to the Wi-Fi Interactive one more time. I got a different look at something that you've been taking a look at recently. So Thursdays have been really bad. What is the streak up to, like down 9 in a row? But if we take a look at this chart, what I've done is I went back to the bull market beginning in October of 22, and I pulled out just a few days of the week. I didn't do all 5, it's too much, but I did Mondays, Tuesdays, and Thursdays. Up here is Mondays. So 1,573 S&P points have been attributed to Monday, and that's by far the highest. Then we got Tuesday kind of in the middle. That's 328 points. But Thursdays, we've lost 426 net, and that's only since the start. So if you take that from a high, Thursdays have just not done well at all since early last year.
No, they haven't. And let's start with Monday for a second. So Monday's been strong this year, right? Historically, Monday's like the worst day of the year.
Basically over the last year since last
Exactly.
April.
And it's like lately, though, when does the news come out? Over the weekend, the Sunday morning talk shows. Oh, we're excited. The war is going to stop, all this and that. And then by the time you get to Wednesday and especially Thursday, the bottom falls out. So is there some randomness? It is down 9, like I said, 9 Thursdays in a row since 1928. That's only happened 2 other times. And off the top of my head, it's Great Depression. I forget the other year. But if we're down tomorrow, that'll be 10 in a row. My math is right. The all-time record for down Thursdays. I said it's the worst Thursday since, remember Joey, how terrible that show was? Like that's like the worst time we've had a Thursday. Usually people like Thursdays usually, but not anymore.
I finally got that reference that you alluded to.
Yeah, I thought it was funny. I guess you got to be a Gen Xer or something to get that one, but yeah.
Ryan, let me ask you, how close do you kind of track software, the IGV sector? Do you watch that? Do you see that as a sort of a tell, a signal on risk appetite?
We do, and you can overlay that, Josh, with Bitcoin. I mean, Bitcoin's hanging above. It never broke 65,000. Now Bitcoin's actually showing some strength. Bitcoin was higher
about
in
crypto?
March.
I feel like it's not even in the discussion right now. When was the last time anybody on this desk mentioned, tokenization?
Well, you'd against it better than I can, but not many probably, right? I'm going to tell you right now, Bitcoin was up in March. I mean, is anybody pointing that out? Maybe not. So there is an overlay, Bitcoin relative to software, relative to the S&P 500. They track each other. So the fact that software is obviously the cheapest it's been since 2013, we manage billions of dollars on our team. We added some of that, I can't mention specific ETFs, but maybe the one you mentioned. We added some ETFs to those software names. Again, on more of a valuation play, saying 2 to 3 years from now, these are some good valuations. What did people complain about? Market's pricey, market's pricey. Yes, 6 months ago when Halloween, when tech peaked, it was pricey. Now, there are some really solid companies. Now, they're down for a reason. I mean, we all get that. But last year, this time, when I was Kevin in New York and we hung out, we were talking about DeepSeek. I mean, we actually had a bigger sell-off last year on DeepSeek in March, okay? And now the war and everything's going on. And tech came soaring back. I don't know if it's going to come soaring back again, but we're slightly overweight tech in the money we run, so I think it will.
Besides tech, I'm looking at the sector action on the Wi-Fi Interactive. This is over the last month. Only green rectangle here is energy in the upper left. Staples, healthcare, these traditionally defensive sectors did not do well over the last month. What are you looking for in Q2 here as we begin? sector action?
Yeah, well, obviously the broadening out. I mean, you mentioned it was some bleeding. I think tech has lagged, but all of a sudden it's taken back the baton. Lifeblood of a bull market, I still think we're in a bull market, is rotation, right? So we've had, almost the joke is the new 60-40 is not stocks and bonds, it's stocks and energy. Because energy zigs when stocks zag the last couple of times we've seen trouble. But the reality, I think that the broadening out can happen. It's probably going to be earnings season. I mean, earnings season starts up, in a week or two? So it's going to be exciting to hear what corporate America has to say, maybe get some other news, some good news besides the negative stuff we keep hearing about. I think we will.
When you said you mentioned you do manage billions, Ryan. So when you're talking to clients, I'm just curious, what are the big questions they have for you right now?
Yeah, well, clearly the war. I think we've hit on that a little bit. The fact is bull market is too far, right? The bull market's gone too far. Well, this bull market just had its third birthday in October. You go back 50 years, 5 other bull markets got to this point. The shortest any of them went was 5 years. You go back to like World War II, we had 8 bull markets get to their third birthday, Josh. 7 of them at least got to the fourth birthday, and usually a lot further. Only in the 60s did a bull market die, if you will, in its third year. So that's just one way to look at it. But I don't think this bull market is nearly as old as people say. Volatility is the price we pay to invest, and that's how it goes. And shout out to your dad. If your dad's watching, I know he's a fan. So
Andrew Lipton, a huge Ryan Dietrich fan.
Andrew, shout out.
That's the truth.
If we got the final question here, anything we didn't cover, and we covered a lot.
Well, let's talk commodities for a second. Gold pulled right back. Let's talk 200-day. Look where gold just pulled back to, violently back to its 200-day. Silver, I get it, all the volatility it's had. We still think commodities make sense. With the money we run, we talked about it, 60-40 portfolio, that 40% is not just bonds anymore. I mean, I think I've said for 2 years, 3 years now, drop it, hit your foot, it hurts. That's something you probably want to own in there, not in place of bonds, but in addition to bonds. We actually own some managed futures as well. So things like that can kind of help you in this kind of higher interest rate, higher volatility inflation world, and honestly uncertain world that we see, because bonds we've seen haven't done all that well. I think commodities on this pullback, specifically gold, still is something investors probably should look at owning.
All right, Ryan, as always, great to see you, especially on set. Thank you, sir.
Thank you.
The Federal Reserve is expected to hold rates steady amid this conflict in Iran. A majority of poly-market traders are betting that rates won't change at all in 2026, but the bond market may be doing the Fed's work for it. Here to explain how is our very own Jennifer Schonberger. Jen.
Hey, Josh, that's right. The bond market may already be pricing in a rate hike for the Federal Reserve. The central bank is looking to hold rates steady in the face of the conflict in Iran, which has sent oil prices spiking more than 50% and raised expectations for higher inflation. In the first month of this war, both short and long-term government bond yields have increased as markets are looking to reprice bonds based on a changing outlook for higher inflation. Fed Chair Jay Powell earlier this week said that traditionally the central bank would look through an oil price shock. However, they need to look at the broader context of the economy right now, which shows that inflation has actually remained above the central bank's 2% target for 5 years already. So the key question for the central bank is whether businesses and consumers start to expect higher inflation over the longer term. If they do, then the central bank would need to act. However, in the short term, it looks like the bond market is already doing the Fed's work for it. Take a look at a chart of the 2-year Treasury over the past month. This is the best barometer for where investors think the Fed funds rate, which is the Fed's benchmark policy rate, will be heading. And the yield on the 2-year Treasury is risen to about 3.8%. It was as high as 4% on March 27th. That compares with 3.4% before the war started on February 28th. And just to put all of this in context, the Fed funds rate right now is sitting in a range of 3.5 to 3.75%. So at 3.8%, we are above that at this point. And remember, we were as high as 4% just a couple days ago. Now, take a look at a chart of the 10-year Treasury, and there too you will see a similar story where the yield rose as high as 4.4%, breaking through that key trading range that we had seen since last August, where the ceiling was 4.25%. Now, all of this is already trickling down to borrowing costs for consumers. The 10-year Treasury directly impacts the 30-year fixed rate mortgage. And according to Zillow, Mortgages have risen half a point on average since just 3 weeks ago when they hit a 3-year low. The average 30-year fixed rate mortgage on a national level sits at about 6.47%, so nearly 6.5%. Josh?
All right, thank you, Jen. And for more Polymarket odds, you can scan the QR code on your screen to go to the Yahoo Finance Prediction Markets Hub, powered by Polymarket. Coming up, we talk through some trending stories. That's next on Market Domination. NASA is shooting for the moon with its Artemis 2 rocket flight, and while the agency looks to get ahead in the new space race with China, the mission is seemingly too hefty of a price tag for Americans. Yahoo Finance's Inez Frey and Brooke DePalma joining us now to discuss. So Brooke, New York Times is saying here, NASA plans to launch astronauts toward the moon. First time in 50 years, sounds like a big deal, but Americans, they say, have never been all that excited about going to the moon. What explains that disconnect, in your opinion?
I mean, I feel like this is sort of the first time that this has happened, especially for younger Americans. I've never seen someone land on the moon in real life, only the videos. So I feel like people don't really understand the allure, the appeal of just how big of a deal this is. Admittedly, going into today, I was excited about it, but now talking about it, I feel like with our team outside, I've just gotten so much more excited about it myself, because you realize this is a pretty big deal, and we're spending a pretty hefty amount of money.
What do you make of this?
It's an amazing deal. I mean, I just feel that this is one of those things. I've been at a launch down in Florida before, and it is literally the earth is shaking when this launch is happening.
And the excitement.
It is amazing. The sound of it is amazing. Just the timing also of everything that's going on in the world. This is one of those things that sort of unifies humanity in a way. I just find that that's great on every level. I'm going to be watching it tonight with my daughter. The other day she said to me, "Mommy, we need a spaceship because I want to go to the moon and eat some cheese." That's literally what she said to me. And I said, you know what? You'll be able to go to the moon someday.
Yeah. And also just to watch over the next 10 days of this trip that they're making. They're going to circle, from what I understand, the moon once or maybe even twice and then circle back to Earth. I think it's just going to be so amazing to watch this journey.
Let me, and as though the Times says that Americans are actually more excited about other events, like they get excited about the Times says rovers on Mars, that gets them going. The Hubble telescope, that's a big one. So maybe like the moon just has like is a PR issue for NASA. They got to get the message out.
Well, and they also have to get the images out because this is also one of these, in this one, they are going to be observing parts of the moon that have never been seen by the human eyes. So if you can get those images out, eventually if they can land on the moon again, this is going to be one of those milestones for humanity that is going to be unforgettable.
Yeah, and I do feel like people are so maybe not immune to it, but we've seen SpaceX, we've seen what they have done, we've seen Blue Origin from Jeff Bezos. So maybe it's that now we're sort of seeing all these commercial players get in, that maybe people don't just have NASA to look for, they're looking at all these other different, private companies as well doing
it. Also might have to do with like what else is going on in your life right now. Like this might be exciting for you. I mean, it's great images that you're seeing. A lot of Americans might also feel like it is exciting. Will it help get my gas back down to $3 though? That's
not
the issue.
So much.
Yeah.
Not so much.
Topic number 2, journal with a good piece. How about this is about a smartphone. Maybe there's a point, Brooke DePalma, where it gets too big for the masses. The journal is saying Samsung will not restock its 10-inch Galaxy Z trifold. All right. This boasts the screen size of 4 original iPhones. It's a massive one, costing only $3,000. What do you think? If we hit sort of like a peak size here?
I mean, like, it kind of looks like an iPad, let's be honest. Like, you look at that and you're like, what even is that? And where am I putting it? Obviously, I'm not putting it in my back pocket. I'm not putting it in my front pocket. I guess I'll put it in my purse. I'm not exactly sure here. I even think that sometimes I have the iPhone Pro Max. I didn't bring it on set with me, but I even feel like sometimes that's even a little larger than what I would like. I want to, like, go back to the days where I had my Razor, my pink Razor, or my Voyager, and maybe go back to that. So maybe it is sort of this, not necessarily fatigue of a bigger phone, but just sort of this nostalgia factor, which I know we'll hit a lot about.
Inez, Samsung did call this product, by the way. They said they did make it clear. They said this is for diehard fans. This is not like a mass market product. So maybe that was it. It was not. It's sort of a luxury product, a niche product to begin with.
It's a luxury product. It's a niche product, and it gets you talking about Samsung as well. So it is also a way to market themselves as well. 30,000 of these. It'll be interesting to see how they fly off the shelf. But to your point, I mean, where do you put this? Are you going to be using this? But it's an interesting look. There's a lot of talk about these foldable phones, and there's obviously a market for it because they are making them. The question is your pocket big enough to fit it?
Rumors and reports, Apple's coming out with a foldable.
Yep.
Maybe this fall. Are you in?
I have to see it.
Yeah.
I think that's one of those things where I have to like conceptualize it because it's crazy to think that how many years now have we had an iPhone? So I feel like it's a new concept. Maybe the rate of adoption will be slow, but there is a lot of excitement on the street from it around the possibility of this foldable.
I'm just going to wait. You just wait for Dan Howey's review.
Exactly. But I did see a foldable phone by one of our colleagues out in our office, and I was excited. I asked her, what is that? And where'd you get that? And I think it might have been Samsung.
Final topic, Brooke. Bloomberg saying here, sales at Calvin Klein have increased so far this spring season versus last year, in part due to viewership of Love Story. The brand noticed an increase in online searches after the FX limited series launched. What What do you make of that one?
Well, this is clearly this love story effect sort of billowing into now a public company. We've heard so much about this Greenwich Village store. I don't know if you guys have seen that. I think it's called C.O. Bigelow. And that's where Caroline did do her shopping for her accessories. And the foot traffic there has been unbelievable because so many people on TikTok are gravitating towards it. And now this has made its way into Calvin Klein, into PVH's umbrella, because so many people are excited for this sort of look and feel, this aesthetic, and they want to bring it back.
Yeah, I'm so divorced from pop culture, and I didn't even know what this show is or what it's about. I had to get
it's one of the
in.
best performing shows that Hulu I think has ever had.
Yeah,
And
40
these
million
ripple
people.
effects.
40 million people watching it. I've only heard about it in podcasts. I have not had time to actually sit down, but I've heard it from podcast reviewers that are talking about it. The fact is that you have, again, fashion that goes in circles. What's in is then out the next year, and then 10 years later it's back in. Just the fact that you've got the 90s styles denim coming back, I'm seeing them all over.
Right.
Right.
It's like a baggier jean.
Yeah.
Very
it's
popular
huge.
right now.
It's huge in New York. It totally is. That is the trend. Yeah.
It certainly is. And also this is catering towards Gen Z, younger millennials. That's who everybody wants to hit right now. So if they're the ones that are tuning into the show, they're going out, they're doing the shopping. And what we've seen is, albeit higher gas prices are hitting them harder, they're the ones that kind of have a little extra cash right now in their wallets.
And go spend it at Calvin Klein. Inez, Brooke, thank you so much. Appreciate it. Coming up, how to use points to save on travel. Don't go anywhere. All eyes are on President Trump's approach to de-escalation talks with Iran and thus the potential ripple effects on the global economy. Yahoo Finance's Washington correspondent Ben Worschel joined now to discuss. Ben, so ahead of his national address tonight, Ben, President Trump saying the Strait of Hormuz must be open, free, and clear before ceasefire talks. What do you make of that?
Yeah, what I make of that is that President Trump is sort of inextricably tied to the Strait of Hormuz. The fate of his war is linked to this, no matter how much he wants to avoid it. This is sort of the latest message we've seen from President Trump on the Strait of Hormuz. And he's sort of tried carrots and sticks here to this logjam. This is kind of an inducement to Iran potentially to move forward on the talks and talk about a ceasefire. And to do that, previously what we've seen is kind of more on the threatening side. I counted previously 5 different ultimatums from President Trump on the Strait of Hormuz, essentially saying, open the Strait of Hormuz now, or we're going to have additional attacks here. So it's kind of a different approach from Trump here, but it kind of gets to this same underlying reality that he can't avoid the Strait, even as he talks at other times about how he doesn't view the Strait of Hormuz as that important, and then other countries have to deal with it. This is an issue he has to deal with before he can sort of wind down hostilities, no matter how much. Whether we'll see that tonight in the speech remains to be seen, but that is just the dynamic here with like less than 10 ships a day going through when it was over 100 just a few weeks ago.
To the extent, Ben, we've sort of seen this, kind of yo-yoing in the messaging. I guess if I'm an investor and I'm listening, watching this, am I better served, Ben, in your opinion, to listen to the White House, to listen to the messaging, or no, just focus on what's actually happening on the ground, some combination of the two? What do you think?
Probably some combination of the two. I think that the biggest market moves we've seen this week for sure are kind of in terms of concrete changes. It's both sort of the what's happening on the ground aspect that you mentioned. I would add what's happening on the water in the Strait of Hormuz. If we do get any evidence, which we've been waiting for weeks and weeks, of additional ships passing through, that'll be a big moment. But it's also changes in terms of both sides confirming that some sort of level of talks are underway. That's been the biggest move we've seen this week, I think. Just in terms of the acknowledgement from Iran, or at least signaling that they're going to engage in talks, that moves the markets higher. That's a kind of real concrete thing that I think investors can look through, even as we're seeing just sort of unreal amounts of bluster, from both sides here, from both Iran and Trump, about kind of their positions here. It's kind of about setting up negotiations. What these negotiations actually happening is the key here for ending this conflict.
Ben, switching gears to another story you wrote, we're seeing TSA agents finally getting paid. Wait times at our airports, your report, they seem to be improving. But then you flagged me, we have some new headlines dropping that could impact all this. So bring us up to speed.
Yeah, for sure. So the TSA agents, which their call-outs have been behind these 4-hour waits plus at airports, are getting paid. The checks started to come in earlier this week, so that's been a huge relief to them. But we do have, just in the last hour, a sense that there could be a deal in the works on Capitol Hill to make this funding permanent. Essentially, not just having them being paid earlier this week, but having them assurances that paychecks will be going forward. This comes in the form of a new statement from the Senate's John Thune and the House's Mike Johnson, previewing what they're calling a two-track approach to getting the department fully funded. Sort of translating that to English, it seems to mean passing the Senate version that passed last week, having the House pass that, which would fund TSA. It would also fund FEMA. It would also fund the Coast Guard. Getting that off the books, and then the Republicans would try to pass funding for ICE and the Customs and Border Patrol on its own track, using only Republican votes. We've already seen some objections to that, but President Trump issued a post earlier today that sort of sounded similar notes. So there does seem to be a high probability that they're going to at least try this method going forward to perhaps immediately fund the TSA, which would be a huge relief to these workers again, who went 6 weeks without a paycheck and have one, but don't have a lot of certainty what's going to happen going forward.
All right, Ben, great to see you as always. Thank you.
Okay.
Air travel is getting more expensive, not just the ticket, but all the extras that come with it. Consumers now having to weigh what's more important, time or savings. For more, we're bringing in Clint Henderson, the points guy, managing editor. Clint, it's good to see you. So I was just talking there to my colleague Ben Worschel, Clint. He was saying, listen, TSA agents getting paid. It seems like wait times improving at our airports a bit. Is that what you're seeing and hearing, Clint?
Yeah, it's been a remarkable turnaround since Monday. Really, as soon as paychecks started arriving, which is what we predicted, the lines pretty much went away. The sick calls dropped dramatically, and that's what was behind those lines. I will say that sense of uncertainty remains a sort of shadow casting onto the TSA and the potential for these lines to come back this summer. I'm worried that if a deal doesn't get done, they might have got their back pay, but they're not going to get future paychecks. So that's what we're really watching right now. And, frankly, as a consumer advocate, I hate seeing the TSA workers used as sort of political footballs. To me, they're essential personnel, and that money should not really be taken away at any point for future funding fights.
Clint, let me ask you, let's say you're flying just kind of this week or next. Bottom line is what you would expect, domestically, a relative return to normal, like get to the airport a couple hours before and you should be broadly okay?
Yes, that's correct. So we're back to 2 hours for domestic, 3 hours for international as the bare minimum. I'm kind of a dad when it comes to this stuff, so I like to get to the airport early. But we're not seeing the lines that we had been seeing. I was in Atlanta Sunday before last. I have never seen chaos like that in my entire traveling life, which is fairly long. But then, now normal wait times at Atlanta, which is tough already, but it has gotten so much better.
That sort of the chaos we did see, Clint, I'm just curious, did that sort of reinforce to you that TSA pre-check or clear, are they sort of, in your opinion, kind of must-haves now for the traveler?
Even for the occasional traveler, I just think they are must-haves. Now, I will say a lot of credit cards that are premium come with statement credits that will cover membership fee. That's how I have both, but I usually sort of pick my poison, whichever line is shorter. And now we've got biometric screening. So if you have pre-check, you can opt in with the 4 major airlines, and you can actually use a separate line that's even faster. So that's what I'm recommending to folks. And even as an occasional traveler, just because that's the first thing that sort of starts to become a mess is the security lines at airports. So better safe than sorry. Now, I will say certain airports, Houston and Atlanta, I'm looking at you, they did close the pre-check and the clear lanes at various points. But in general, they're going to be much shorter.
Clint, let's talk about saving money. What are some, just sort of relatively easy hacks, Clint? Tips and tricks. You tell friends and family, hey, here is just some smart, relatively easy ways to potentially lower the cost of a trip.
Yeah, my favorite tricks are, first of all, travel on Tuesday, Wednesday, or Saturday. That's when there's the least business travel. Not only are crowds going to be the smallest, but it's also the cheapest to fly. Airline vacation packages or, third-party booking vacation packages, book your flight and hotel together. You can save up to 40%. I like American Airlines vacations packages. Great deals to be had that way. Google Flights. Best tool in the market. They don't have a vested interest in where you book. They show you the cheapest booking that you can do, and you can even set price alerts. They'll notify you if the price goes up or drops, and you can see if you're getting historically a good deal. And then Google Flights Explore, which is a separate tab on there. You put in your home airport, it opens up an interactive map, shows you all over the world the cheapest places you can go. That is a great way, if you're flexible with your destination, to find really good deals.
In 2026, Clint, I'm just curious as we sit here, are points and miles, Clint, are they sort of as valuable as ever, or no? Have airlines sort of made it more difficult to get real value out of that?
So here's the problem. They have gotten harder to use and they've become less valuable over time. But the silver lining of that is the offers, the sign-up bonuses on these credit cards have become so much bigger. So it's a constant arms race between consumers and banks and airlines and hotels. Who's going to squeeze the most value out? That's how my website, The Points Guide, makes money, because we tell you how to hack the system, how to use points and miles, and how to get the best value for those points and miles. So it's always going to be a war of attrition, and you just got to be on top of it. And if you are, you can be a real winner in the travel space.
Clint, so good to have you on the show today. Thank you.
Good to see you.
Well, the New York Auto Show is in full swing here with some of the world's largest automakers showcasing their slate of new vehicles. The industry is also facing a slew of challenges, of course, from tariffs, supply chains, and inflation. Yahoo Finance's Praz Sumarani is on site, joining me now. Praz, what are you hearing there on the ground? What's the vibe, Praz?
Yeah, Josh, first day of media day, people are kind of wondering about what does the industry have in store for the rest, for the rest of the year. What kind of cars are we going to see? people talking about more hybrids, more SUVs, of course, nothing new there. But it's really when the show actually opens up, Josh, in the next couple of days for the larger attendees, all the people that come in, the families, the kids. They're going to see, yes, those hybrids and those SUVs, but also a couple of sports cars here. Right? There's the Nissan Z. The new Z is pretty cool, and also the new Corvette Grand Sport. I just saw that back over there in Chevy land. Really cool stuff. So it's a mix of practicality, but also newer cars, sportier cars. And basically, the industry's trying to get to the point where what do buyers want these days? And we're going to get to that now next, because you're going to ask me about executives, aren't you?
I am. What do you got to say there?
So a lot of the thing is coming down to affordability, right? That's the big thing I've heard about from people, Toyota, Nissan, Hyundai, things like that. Basically, how can you get the cars in people's hands in the face of things like tariffs, right, that are going to increase prices? And what does that mean? It comes back to domestic production, localized production. Again, those same companies, Toyota and Nissan in particular, building a lot of cars in the US. That's one way to insulate themselves from those tariffs. And again, like I just mentioned, how do you get buyers in the showroom? You got to give them a reason to come in. It's got to be beyond mobility. It's got to be about exciting cars. It's got to be sports cars, off-road type SUVs. We just saw Hyundai unveil the new the new Boulder. Sorry, this was their new sort of body-on-frame truck. They think that's a new segment for them. Eventually going to get pickups from Hyundai, and they think that a true truck will do really well in America. And that's what they see as the future for this country, at least, is localized production, affordability, but also excitement.
On that affordability question, Praz, obviously American consumers, prices at the pump, they popped quickly, went from 3 to 4. Is that being talked about there?
Yeah, definitely. I mean, when you talk about affordability, they're saying it's not just about the price of the car, right? It's interest rates, it's gas prices. These are all big concerns for Americans. So the question is then, how do you then bring that kind of monthly payment down for Americans who are dealing with these added expenses? What ends up happening is you start seeing the explosion of 84-month term loans, which blew my mind. You're also seeing a lot of people who actually have larger and larger amounts of negative equity in their cars. When they roll over into a new car, they put more debt into it. That's getting higher. So that's a big concern for the automakers, because if people can't afford cars, they don't sell any.
Finally, Praz, since we have you, my friend, I want to ask you about a different story, which is SpaceX has filed confidentially for an IPO. This is Bloomberg citing sources. Could be the biggest ever listing. What do we know?
Yeah, I mean, basically, look, it's potentially eyeing a $1.75 trillion valuation, right? That's big stuff. We had known that they were going to file this confidentially in the next coming days, and it happened today, targeting that June or midsummer IPO date, public offering date, and also hearing that there's going to be potentially 2 classes of stock, right? Kind of how that's been the norm these days with Silicon Valley companies, is giving the founders like Elon Musk and CEOs a lot more voting power. So that's one thing. And also we've heard about expanding the base of letting more retail investors get in on the IPO from 20 to 30% interest there. Usually it's around 10. So that's part of that mix too. Is the the SpaceX this is gonna be the biggest IPO ever. It could dwarf, the amount of shares on offer could dwarf the last 2 years of IPOs, right? So this is a massive listing, and for Musk, it's sort of the culmination of where he wants to be as an entrepreneur: space, EVs, tunnels, etc.
All right, Praz, thank you, buddy. But that is not all from the New York Auto Show. Praz Turan also had the chance to catch up with Toyota Motor North America Vice President and General Manager David Christ for a look into the company's outlook.
We had a great year last year. It was one of our best years ever, and we're off to a really good start in the first quarter of 2026. Despite all the uncertainty happening in the world, we are really off to a good start, and our dealers are excited about the year.
Yeah, a lot going on so far this year, and not just that's in the hands of automakers. So before we get into that, I want to talk to you about some of the cars here on the floor. You have the CHR, other EVs like the BZ Woodland, even the Highlander coming up down the line here. Interesting sort of from an outsider point of view, a lot of EVs coming on as the industry or the market sort of slows down a bit. What's the thinking behind that?
So first, how about this Wavemaker 4Runner right behind us? This car makes a statement: bold, exciting, fun.
Really does, yeah.
So CHR is just arriving in dealerships now. It's a fun urban BEV, really strong styling. Feedback from consumers and dealers has been really positive. We're launching the BZ Woodland, which is another BEV. A little bit bigger than our BZ, which is our other BEV we're selling today. A little bit bigger, more outdoorsy, more adventurous, room for all the things that you want to take outdoors. And then later in the year, we're launching the Highlander BEV, which is a really capable 7-passenger, really large third row, great packaging SUV that is only available as a BEV. So by the end of this year, we're going to have 4 BEVs, up from just one that we're selling today.
You know, some of those EVs you guys make in America, that's my understanding, if that's correct, and you're also investing in America with a new investment, I think $1 billion in Kentucky and Indiana. Walk me through what's going to happen to those facilities. What are you guys going to make there, and when do those come online?
Yeah, so Toyota is investing huge in the US. We built a North Carolina battery plant, $13.9 billion investment. We just announced recently an additional $10 billion of investment, $1 billion of which is going to Kentucky and Indiana to expand our capacity there. The Highlander BEV is going to be built in the US, really great, a made in America story, so our footprint in the US continues to grow. We want to sell where we build and build where we sell, so we're going to continue to invest in the US in manufacturing.
And I'm seeing other vehicles here like GR Corolla. I also got the new Tacoma out there, cars that are imported into America, and I know Toyota had a pretty big tariff bill last year. How do you alleviate some of that, and is it potentially hit the consumer at some point, because you can't absorb all those prices, or all those costs?
So about 85% of Toyota's US sales are made in North America. Over half, 55%, are made in the US, so we're really proud of our investment in US manufacturing. Obviously, tariffs are a challenge. They are an additional cost on the industry, and we're working through those. We spend a lot of time trying to keep our cars affordable. We offer 6 vehicles under $35,000, which we're really proud of. Gives people great choices for a lower cost, and we're going to continue to focus on affordability as we go forward.
Yeah, affordability has been a big word last year. I think it'll continue through 2026. If we see automakers trying to meet the consumer there with high interest prices, high gas prices. Even
Sure.
say we have the new RAV4 is going to be all hybrid. That's a gas play, right?
Yep.
As well, right?
Yeah. So when you think about affordability, it's not just the price of cars. Obviously, the price of cars has gone up. It's also interest rates. Interest rates are higher than they were 4 or 5 years ago. Cost of car insurance has gone up. Gas prices have gone up. So we're very sensitive to that, and we really want to continue to offer affordable vehicles for our customers. So it's not just what cars we sell in what segments, it's also the grade level. So we want to continue to offer base grade trims so that more consumers can afford our products.
Back to manufacturing. It's a very complex supply chain that you guys, Toyota, and a number of other automakers run. Strait of Hormuz issues there. It's not just oil, it's also the plastics, and it's also aluminum, things like that. Are you guys impacted at all from that?
Yeah, we haven't had any major supply chain disruptions so far. Obviously, our Middle East operations and car sales have been massively disrupted, but that's something we're working through, and we obviously monitor the supply chain situation every day.
So back to, from the Strait of Hormuz to back to New York, we're here at the auto show. The show has sort of been plugging along for some time now. Some of the more premium manufacturers have sort of removed themselves from the show, but Toyota's still here, a number of competitors are still here. Why is the show still important to Toyota?
So we've always had a presence in the New York Auto Show, and as you can see by the display, we have a significant presence. We do it for several reasons. One, we love to showcase our new products. CHR is just launching now. It's sitting right to my right. Really exciting chance to get consumer feedback on the product. The New York Auto Show is always historically one of the most attended shows by the public, so it's a good opportunity to get our products in front of a lot of people that may not know about Toyota, know our product offerings, show them everything we got here on the floor, and hopefully get them to be our customers.
Yeah, I mean, it's New York's tri-state area, right? It's not just New York, it's
Yep.
a number of heavy, densely populated area. I don't know if you know or not, but tell me, what cars of Toyota is the most popular out here in the East Coast, would you say?
So the RAV4 is our #1 selling product. It just went through a full redesign, ground up. It is just now launching at dealerships. The product has been really well received, really exciting new product, all new powertrain, all new frame, everything from the ground up, it's new. New multimedia system, our TSS safety system 4.0 is new and on the car. The RAV4 is a home run. It's the #1 selling vehicle in the US.
Coming up, we've got you covered for the closing bell on Wall Street. Stocks ending the day higher to kick off the second quarter. Very own Jared Blickery is standing by with the latest headline. Jared.
As you said, Josh, nice way to start off a new month, a new quarter. And I was skeptical yesterday of that bounce, but we are getting some continuation today. So that is very meaningful. Here is the Dow Jones Industrial Average. It is up 224 points today, or about half of 1%. Nasdaq up over double that, 1.16%. S&P 500 somewhere in the middle. And let's also take a look at the small caps. Russell 2000 up not quite 1% there. And I do want to get a final tally on the VIX. And it looks like that is now below 25. Only a couple days ago, we had two closes above 30. That was something Ryan Dietrich pointed out an hour ago on this program. We have now sunk nicely back into the mid-20s, but there is more work to do there. Mid-20s is not extremely risk on, shall we say. So let's take a look at the sector action. In the pole position, we got industrials up 1 2/3%. Number 2 is tech. Then we got materials, and then we get into healthcare and consumer discretionary. But that top row is mostly cyclical, except for the healthcare trade right there. And what's not working today in a big way was energy. That is a sector that has been the number 1 sector of this year, but not today. Also, consumer staples, another defensive sector that was down just a little bit. But here's where the Nasdaq 100 is shaping up. You can see Alphabet was a standout, up about 3.5%. A lot of chip stocks flying high. We'll get to those in a second, but just want to point out that the ratio of green to red strongly favoring the green here. And before I dig into some of the industries, I just want to show you the Dow Jones Industrial Average components as well. Here's a standout. Chevron down 4.5%. That's that energy trade heading south today. And then Nike in the bottom right, really small there. That is down, that's Travelers. Dow is down 15.5%. And for the year, you're going to see Nike down about 30%. So just doubled its loss in one day there after earnings. Industrials did well today, as I was saying. So Boeing's up 4%, Caterpillar's up 3%. But just kind of switching gears over to tech, I wanted to dive inside the semiconductors. Here we see Micron in the upper right. That was up about 9%. Intel also up nearly 9% at the bottom of your screen there. Marvell up 7, SanDisk 9, Western Digital 10. So some of those chip stocks that have been flying all year long back in rally mode. What's not in rally mode altogether is software. A couple of dark green spots there. It looks like Twilio is up 3.5%, but for the most part, you're not seeing anything near as bullish as we did in the semiconductors. That has been the state of tech this year. That software is just kind of flagged as chip stocks have done quite well. I'm going to show you some of my leaders and sentiment indicators, a lot of ETFs here, but broadly, just note that there is a lot of green behind me. In the upper left, the number 1 is a chip stock. That is the SOX, the Philly Chip Stock ETF. That is up 3%. Followed by Korea. That's a chip trade as well. That's a chip proxy. Then you got ITA, that's aerospace and defense. We had a big deal with Lockheed Martin and Boeing today. Then you got momentum, quantum trade, list goes on. And then what did not work well today, that's another oil trade down there. Also China and software. So broadly positive, a few of the themes that we've seen play out this year playing out today, and a couple new ones thrown in as well, Josh.
All right, thank you, Jared. For a closer look now at the market action, we have Kevin Gordon, Schwab Center for Financial Research, head of macro research and strategy. Kevin, great to see you, especially on set. Let's start with the Iran war, because you make this distinction, Kevin, between front page risk, you say, and bottom line risk. Just walk us through that. Explain what you mean by that.
Sure. So it's really this framework that I thought of actually dating back to Venezuela, when everything was happening with Greenland, especially when everything was happening with the Fed and sort of the latest legal struggles with Jerome Powell. And the questions that we were getting a lot from clients was, how we're centered around how is the market not reacting more severely to this? And for me, it was more along the lines of looking at it from a data perspective and thinking about, at the end of the day, is this going to impact what the market cares most about, which is S&P 500 earnings, and of course the growth trajectory of the economy. But if there wasn't going to be as much of this, actual bottom line risk, then you don't necessarily have to think about the market sort of pricing in that really adverse scenario. I will say that the longer this lasts in terms of oil flow and production being constrained, and the longer we see sort of elevated oil prices, I do think that the gap between the front page and the bottom line risk continues to narrow. But as it stands right now, maybe it's because analysts analysts have been just sort of flying blind a little too much lately, but we haven't seen earnings estimates move down in a material way. That is sort of a reflection, I think, of so far the data not showing that the economy is struggling, at least right now, massively under this. But of course that could change.
Ken, would there be sort of a data point or a metric you would watch that would suggest to you, okay, wow, now we have crossed the line. We do have material bottom line risk. Like if I told you oil, let's say it hit 120 and stuck there for some period of time, would that be it?
Oh yeah, I mean, I think that certainly would be, a pain point. To me, a lot of this comes down to the labor market because you're in such a different position today than you were when we went through the last energy shock in 2022. I think that's probably the only historical comparison you could use. It's not completely apples to apples, but it's the closest you can get because it's the last time we saw such a significant increase in oil and gasoline prices while we were a net energy exporter. We're a little bit more insulated, because of that relative to the rest of the world, but not completely. But to me, I think because the labor market was in such a stronger phase back then versus what it is today, payroll growth is barely above zero in percentage change terms. It was above 5% back then. The claims data every single Thursday morning, that's what becomes sort of the North Star for me, because that would that gives us the indication if companies are resorting to layoffs because of this. Claims have actually rolled over since the start of the war. I don't want to extrapolate that completely, but I think that as long as they stay in a relatively low pattern and move sideways, it probably keeps you out of that sort of traditional recession territory.
You describe our economy, you say strong GDP, Kevin, you say, but weak sentiment, a vibepression.
Yeah.
What is a vibepression? What does that mean?
So it's building on, a vibesession, which became sort of a dominant framework from my pal Kyla Scanlon a couple of years ago. So I was really just building on that and looking at some of the consumer sentiment metrics from University of Michigan and Conference Board that we've started to get in for March, confirming that you are still in this environment where it's a depression in sentiment, 5 to 6 years now of this.
What explains that, Kevin?
Oh, well, I think the first wave undoubtedly was inflation. I mean, the significant increase in prices and price levels and the fact that we haven't seen deflation, which is never a good thing, but from the consumer's standpoint, you're always constantly in this state of this is how much more I'm paying relative to pick whatever starting point. But now you add on and you layer on the labor market concerns, both from an AI perspective, especially for younger people thinking, is this going to result in job loss for me or lack of job availability? And then you add on also now the second component or the second angle to it, which is concerns around the war and whether these higher energy costs are ultimately going to cause companies to sort of pull back on hiring and or increase in layoffs. That's where I think the second phase of this sort of kicks in and what keeps you in that persistent vibepression. But I call it that because even though you've had this really poor sentiment over the past 5 years, GDP has continued to go up. Household net worth has gone up. Asset markets have recovered, every single time that they've dipped. So it's created this really big gap between what is actually going on in the data, but also how people feel.
Can I ask you, give your views of the macro there, the labor market? Where's the Fed in all this?
So I think it's still, as a group, as a house, we're still not in the camp that they're considering, hiking this year. We're in the 0 to 1 cuts, just because, again, when you think about, yes, there will be an inflation impact from what's happening with the war, but at the end of the day, the Fed's probably still mostly concerned about the impacts to the labor market. I think especially if you start to see consumption, sort of under the weight of what's happening with energy costs, that consumer basket starting to shift in favor of gasoline spending because it's gone up so much, you have to pull back in other areas. That probably gets you to a little bit of a weaker labor market scenario, and I don't think that the Fed wants to risk that with a hike. Because to me, hiking, that's sort of a choice in changing direction and having to commit to a path. I don't know what a one hike and done situation would necessarily accomplish, especially because the labor market is in just a little bit more of a weaker spot than it has been.
Let's say, Kevin, 0 cuts, you get no cuts in 2026. Can the stock market still move higher?
Yeah, I think so, but I think again it will come down to what is the profile of the labor market and how does the overall consumer spending engine hold together. I think one of the important distinctions that we've had to make over the past 6 months is the fact that even though the payroll growth on a month-to-month basis has come down so aggressively and at times was pretty much averaging zero. Even if you average January, February so far this year, you're almost at nothing. Even though that was the case, your total stock of payrolls was at or near an all-time high, meaning that spending engine month to month, the 150 million and change people that are employed, how much they're making on a weekly or monthly basis, how much of that goes into the economy. As long as that continues to stay in motion, then you have a relatively resilient economy. It just sort of slows a little bit over time. So that's, I think, the differential that really matters in terms of the market being able to do well. The Fed, to me, Fed cuts are not the juice for the market. It's the actual economic growth profile of the country.
Let's talk about earnings season. I want to get you on this because, listen, it's right around the corner.
Yeah.
Here's what the Journal said. They put it like this, Kevin. They said, by some measures, stocks are still on solid footing. They say analysts are projecting a sixth straight quarter of double-digit earnings growth for the S&P 500 companies during the first 3 months of 2026. Is that what you're seeing?
So far, yeah. I mean, to the point earlier, we were talking about earnings estimates just having gone up. Revisions have gone up most aggressively, actually, for the tech sector, somewhat ironically, even though that sector has really struggled over the past 6 months. But I think that, number one, analysts have probably just been, rightly so, late to the game of bringing those estimates down. I think it's just still too soon to see what the actual impacts of the war are going to be. But number two, I think the other thing to keep in mind in terms of earnings growth and the market's performance is that historically, as you mature into the earnings cycle and as growth actually continues to expand into the double-digit territory, that's consistent with weaker gains for the S&P 500. Not losses, but just weaker gains. You tend to see the strongest gains for the market when earnings have gone through their recession and then they're rebounding out of it. So even if we get back to some sense of normalcy, in a relatively short period of time, and if earnings growth is uninterrupted and undisturbed from where it was at the beginning of the year, you probably wouldn't expect, at least historically, you wouldn't expect this just sort of massive surge for the market just because of that maturity of the earnings cycle.
Kevin, so good to see you, especially on
Nice
set.
to see
Thank you, sir.
Thanks for having me. Thanks.
Coming up, where one investor in the healthcare sector is seeing the most opportunity. That's next on Market Domination Overtime. new phase of competition has taken shape in the healthcare space. Eli Lilly receiving FDA approval on its new GLP-1 weight loss pill. The company turning the heat up now on its rivalry with Novo Nordisk, which received, remember, approval for its weight loss pill back in December. Here to discuss this and a whole lot more, we got Hallie Tecco, Rock Health founder and author of Massively Better Healthcare. Hallie, it's good to see you. So we got a lot of news to cover. You're just the one to cover it with. Let's start with that headline. The FDA approving Eli Lilly's GLP-1 pill. What did you make of that news? An oral option, Hallie.
Yeah. Well, obviously, this has come after Novo's Wegovy pill, which has been on the market now for a month and also quite successful. So I think the more options that we have for folks that are effective, safe weight loss options, to me, is a good thing.
Do you think does it aggressively sort of expand the market, Hallie? Are there a lot of people, for example, taking the shot right now, taking the jab, who are thinking, you know what, man, that pill sounds like a better option?
Absolutely. And in fact, Josh, a lot of men are afraid of taking shots on a weekly basis. And so this is a great option for those who are maybe afraid of needles. But it's also a great option for folks who maybe travel a lot because the injection requires refrigeration. As we know, the pill does not. So it is a lot more accessible. Again, more options. It helps people find something that works for them, and it helps bring down prices.
Hallie, here's another headline, kind of a big trend in your space that the Journal highlighted. I don't know if you saw this one. They talk about how big drug makers, they say, on the deal hunt aren't opening their wallets as wide as they used to. They say the industry's latest acquisitions, well below $10 billion, reflect a more tight-fisted approach to deal making than previous periods. What did you make of that? Was that a sign of discipline, Hallie? Maybe less confidence on making big bets? How did you interpret it?
Yeah, well, I actually track M&A within digital health. So any sort of healthcare company that has like a software component. And this year has been rather quiet. We have seen 4 kind of notable acquisitions over 100 million. Interestingly enough, 2 of them were acquisitions of companies abroad. So these are Hims & Hers, which acquired Australian-based Eucalyptus for over $1 billion, and Sword Health, which acquired German-based Kaya Health for $285 million, and Kaya Health is based in Europe, so really trying to expand to that demographic. So it's interesting to see that these acquisitions that are happening aren't necessarily happening for the technology as much as for a customer base in a new geo.
Hallie, let's have an investor, and I'm listening to this. I'm like, I want to try to place a smart bet on a future acquisition target in your healthcare space. I'm curious, what would you be sort of watching and monitoring? Like, what would be the variables, Hallie? Like, would it be like pipeline quality or milestones, maybe big fancy partnerships? What would you be on your radar?
Yeah, I think the number one thing is growth. And has this company been able to show that they're growing year over year, able to acquire new customers while keeping existing customers? I would look at their unit economics. Is this a company that is sound, that's building something that is long lasting and sustainable? And then I think, as you said, like partnerships, that sort of signaling that this company is able to reach out and partner across the board is really critical as well. But at the end of the day, it comes down to numbers.
Another topic, the role of healthcare. Let's go back to Eli Lilly because they made news for another reason. Sticking with them, they reached this deal with Insilico to bring AI-developed drugs to market, Hallie. I guess, is this, when you hear about something like that, do you see that as, hey, that is a real potential sweet spot for AI, drug discovery?
Yeah, absolutely. I think when biotech is looking at AI for drug discovery, it's really just the beginning. We have everything from the way drugs are discovered, marketed, manufactured, that AI can really play a role. And we're actually seeing this from the VC's perspective. So we went from 37% of VC dollars in digital health going towards AI-enabled companies in 2024 to over half last year. And 2026 will undoubtedly be even higher because these companies are they're taking front stage. They're getting customers. They have real traction, and VCs want to be part of it.
Finally, Hallie, we had another piece of news this week. Whoop, I don't know if you saw this. So, of course, the wearable device company, right? I think calls itself the Human Performance Company. They raised $575 million. That was a $10.1 billion valuation. What did you make of that news, Hallie? What did it sort of tell you about appetite and demand in that wearable space?
Yeah. Yeah, I mean, Aura is their biggest competitor, and obviously Aura has also raised a considerable amount of money at a high valuation. This kind of goes back to what I was saying about GLP-1s. More products, more service, more competition. That keeps both the quality up because these companies have to compete for customers, and it keeps the prices down. And hopefully we'll see more affordable options because we now have more funding going towards this innovation. And hopefully we'll be able to spread this to more people because still right now these products are several hundreds of dollars. So they're not accessible to many Americans. My hope is that by having these companies grow and get funded, that they'll be able to have new product offerings, bring down costs, and make it just more accessible for all. I'm always very pro competition.
All right, Hallie, great to have you on the show today. Thank you.
Thank you.
Hyundai is debuting a new vehicle at the New York Auto Show. It's called the Boulder Concept, company's new off-road SUV set to launch in 2030. And Yahoo Finance's Praz Sumeranian spoke to Hyundai North America's CEO on the new car and its outlook for the road ahead. Take a listen.
This basically gives you a really good indication of our design direction for the future. So body on frame is a new segment that we're going to be entering in the next several years. And this is a nice teaser of what the future might look like.
It kind of reminds me of something that I've seen before. Cough, Bronco. But hey, but yes, it does remind me. But first, it's going to be an actual pickup truck, right? And that's actually going to come out.
Yeah. So what we've said is that by 2030, that we're gonna bring to market a new body-on-frame pickup truck.
So, besides this new product coming out, over the past 5 years, I think it's been sales record after sales record after sales record in the U.S. 2026. How is that trending for you, and how do you keep the momentum going with all the hits?
Yeah, good question. So 5 for 5 years of record retail sales, and right now we're poised to have our 6th straight year of record retail sales. I call it 6 for 6 in 2026, but I think it's a real testament to our engineers and our designers. For us, it always starts with the product, and right now the product is resonating extremely well with the consumer. We've got many different platforms that the consumer can choose from. I always say that we have a seat for every purse. And no matter which way the consumer wants to go, whether it's ICE, whether it's hybrid, whether it's EV, we've got a vehicle for them.
So touching on affordability is the fact that Hyundai does have a lot of operations in the U.S., but also they import some vehicles too. Tariffs are still a thing there. How do you alleviate that? Is it because you guys are going to try to increase production in the U.S.?
Yeah, well, the best way to alleviate the tariffs is to localize production, and that's exactly what we're working on right now. So by 2030, we want to have at least 80% of our production localized, and that's what we're currently working on. We've got significant investments that we've made in the United States, in particular in Savannah, Georgia, at our new Meta plant facility. That was all part of a $12.6 billion investment. Phase 1 will be able to produce 300,000 cars, and Phase 2 up to 500,000 cars. And that campus is going to also provide 8,700 manufacturing jobs in America. And so that's something that we're really, really proud of.
That Phase 2 at 500,000, I guess, annual run rate at the facility, when will that happen? And is there any kind of like speed bumps there with that? So that's a big move.
It is a big move, but we're moving at warp speed to bring more and more products into that plant. Mm-hmm. And by 2030, we should hopefully have it at full capacity.
You mentioned affordability earlier. We're seeing cars now touching $50,000 on average, new cars. How do you address that when you're trying to actually make good product, but then also have to address things like the tariffs, and also we're seeing stuff like Strait of Hormuz closure where supply chain may be impacted?
Yeah, so we've, just going back to what I said earlier, we've got a pretty good product portfolio. I'm really proud of the fact that we've got products at the entry level and at the almost luxury levels, and we've got everything in between with all different types of powertrains. So again, we want to meet the customer on their journey, whether it's driving something that's really fuel efficient, whether that's economical, or if you want something flagship like the Palisade Calligraphy Edition. We've got something for everyone.
So just to be clear, the Strait of Hormuz issues, is that impacting Hyundai at the moment from a supply chain issue?
Well, you know what? We can't control what's happening in the Middle East. I mean, obviously we're paying close attention to what's happening there. But the good news is that all of our employees in the Middle East are accounted for. They're safe, and what we're focused on is how do we take better care of our customers? How do we take better care of our dealers here in North America, and particularly in the United States?
So, also, amongst the product portfolio here at Hyundai are EVs and the Ioniq 5, right? That's an affordable EV. How do you keep that affordable, given the fact that we don't have that tax credit anymore? The demand story is a little bit uneven these days. How do you keep EVs cheap and also part of the portfolio?
Well, for us, it's all about marketing and advertising and promoting our EVs. We said from day one that we still believe the future is electric, and we're going to continue to keep our foot on the accelerator, keep promoting, keep advertising, keep marketing EVs, and demonstrating leadership in that space. However, we want to meet the customer on their journey to electrification. So if they want to step into a hybrid, they can do that first. But if they want to take a full leap of faith and jump into an EV, they can do that as well. But again, we want to meet the customer on their journey to electrification. And so far, if you look at our performance in Q1, both hybrid and EV are up significantly year over year. So hybrids are up significantly, and our Ioniq 5 in particular is up significantly year over year.
And you can build all kinds of vehicles with different powertrains in Georgia, is that right?
Well, right now in Georgia we're building 100% EV, but we're pivoting very quickly to bring hybrids into that plant as well.
Right. So as you look ahead to 2026, what has you excited, and also kind of at the New York Auto Show, what are the customers telling you when they see the Hyundai products?
Well, the customers are telling us that they want more. And that's one of the reasons why we decided to go into body-on-frame pickup trucks. And so I'm just really excited about the future. I'm excited about the product portfolio that we have today. I'm excited about our dealer partners who are making significant investments in the brand as well. And I would say the future for Hyundai is bright.
Coming up, we celebrate Apple's 50th anniversary on Asking for a Trend. Hello and welcome to Asking for a Trend. Apple turning 50 today. A company that started in a garage and went on to redefine everything from personal computing to smartphones. But as we mark that milestone, the focus now is less about the past and more about what comes next, with AI reshaping the tech landscape and Apple seen by some as playing catch up here. Key question for investors is whether or not the company can reinvent itself once again. Joining me now is Yahoo Finance tech editor Dan Howley. Dan, maybe start here. Apple turns 50. Big day there in Cupertino, right? You've been thinking about this company for a long time, writing about it, analyzing it. As you think about this milestone, how do you frame it? What does it mean to you?
I mean, to me, it's incredible to see a company that went from the highest of highs to near total collapse, now become one of the biggest companies on the planet, most recognizable. Also, by the way, not for nothing, but as far as brands go, they're one of the most loved brands as far as quality goes, right? So, I mean, to me, it's just wild to see that. I wrote a piece on this on yahoofinance.com about how this is a company that is so good at changing, right? It's never holding on to a constant. When it does, that's when it's not succeeding, right? Like when it had those dark periods in the 90s, the late 90s, it really wasn't doing anything transformative. But as you see them change through the years, that's when they're doing their best, when they're going from personal computing to audio into consumer electronics, dropping Apple computers and just becoming Apple, going on to the iPhone, iPad, trying all of these different types of categories. That's when you see Apple at its best. And so I think that is probably one of the most interesting aspects of it. And, I spoke to Bill Fernandez, who is the first employee of Apple outside of, Steve Jobs, Steve Wozniak. And he had said to me, he likes the idea that it's always changing, that it's not one kind of basic company. And he said that some people, it's not a popular take among people who have worked there because it's not their Apple at that point. It's not the hobbyist company. It's not the company that makes PC or personal computers. It's not the company that is about the iPod or things like that. Or it's still the iPhone company, but it's shifting a bit. But he said that that's one of the great things about it is that it's more or less alive and it's able to change in these ways. And he said he appreciates that. So coming from employee number one. That's got to mean something.
You mentioned the iPhone. Would you consider the iPhone the most successful consumer product of all time?
Ooh, that's interesting, right? I think so. I mean, individually as a product, yeah. There have been other smartphones. There's other smartphone manufacturers. Apple isn't the largest smartphone maker in the world. They're among the largest smartphone makers in the world. But you look what they did, and they essentially created an entire economy. Right? The App Store helped create, I can order, socks and burritos from the couch from this one screen, right? Don't ask.
And really, what more do you need?
Don't ask what I'm doing with socks and burritos, by the way. That's none of your business.
You're getting comfortable and you're eating well.
I am. I do think that it's interesting to see how they.
And also the way you're talking about it, I would add too, it's not only what you can do with the iPhone, how many imitators did it spawn?
Well, that's the other thing, right? I mean, you look at the companies that they also put out of business. Nokia, right? I mean, Microsoft tried to buy them. Let's not talk about that. BlackBerry just went the way of the dinosaur as well, and they've seen these companies. I think it was Google was about to launch an Android phone, and they had seen what the iPhone was, what Steve Jobs had rolled out, and they said, all right, well, we got to scrap this. We got to go back to the drawing board because this just annihilates what we were going to do. And so, you have seen all of these types of changes over time. And granted, the iPhone has continued to change. It's slowed down that pace of innovation somewhat, but it is still that go-to. I mean, I don't think there's another phone company that you can get, specifically phone company that you would get where people say, well, I'm just going to stick to an iPhone. And the people that are like, oh, you got a green bubble, you can get lost. That's the dumbest thing ever. All right, it's just a phone. Okay.
I love when the Jersey in you comes out. Get lost.
Yeah.
That's a Dan Howley I love.
If it was really Jersey, I wouldn't be able to say it, but
Apple turns 50. Let's spin ahead. How would Dan Howley define a successful Apple at 60?
I think the big question is, right now the big question everybody's asking is what's going on with AI, and I don't know necessarily if AI is, in being a huge AI success is in the cards for them, and I don't think it has to be as long as they have built-in capabilities that are more than just, fun, flashy things like, oh, you can add a dinosaur to the background of a photo. I'm not going to buy a phone for that. That's the dumbest. I'm not going to buy a computer for that either. I think as long as they have it spread throughout the operating system the way, any other kind of technology is, that's worthwhile. I think the bigger question is what's that next big thing? You know, the iPhone came after the iPod, right? Two enormously popular devices. I mean, I remember when I was in, what was I in? I was in college, I think, when the iPod, or maybe high school, something around there. I was trying to buck the trend. I got a mini disc player by Sony. Nobody probably remembers what those are, but my wife had a Zune from Microsoft, so one of the only people on the planet to have that, I think. But then eventually I got an iPod, and it's like, it was one of those products where you just thought, oh my God, this is amazing. And then you saw the iPhone, and at first I was like, you're paying that much for a phone? That's crazy. But then I actually got to use it, and I was like, oh my God, that's crazy. Prior to that, it was what they were doing with the iMac and their computer side. Now, what's that next product going to be has been the big question for Tim Cook. And I think that that's part of the question that will, you know, his legacy will lead on. But we were just talking, you know, before we came on about how people just kind of dismiss services. That's the
I was going to get the Dan Halley take, and there, of course, you see Cook and Jobs. Your take on Cook, who has led this company for a long time now, what grade would you give him?
I would give him an A+. I mean, look at what the market cap is for this company. And also, by the way, the quality has not dropped. You know, he could have taken over and been like, all right, let's just gut everything. Let's get to the lowest common denominator. But no, that's not what they've done. You know, even with their lower priced products, I know I've been talking about this a lot, but the Mac Neo is crazy. You hold that and you're like, oh, I'm holding a MacBook. You know, like this is a quality product. They could have just said, all right, well, let's make it out of plastic, and you know, it's going for cheap, whatever. You know, but no, they didn't do that. And so, I think that's absolutely worth keeping in mind. But his work at services, you know, you have Apple Fitness,
faster growing, higher margin. Yeah,
I mean, it's crazy how well they've done, and continuing to expand the iPhone. I mean, if you look at what they just did in the last quarter, it was a record September quarter for them. And so, you know, this is a company, I think, or even their quarter prior. This is a company that I think is going to continue to be where it is, as long as they keep to that ethos. And you know, a couple of folks that I spoke to said that ethos is quality over everything, and they managed to do that. And you know, it's not where what was it, the Newton, where you know, it didn't work well. It wasn't, you know, the writing. There was a famous Simpsons joke where it was, you know, instead of beat up Martin, it read eat up Martha, and it just like how bad it was. So it's like, you know, they had that era, but they transitioned out, and now they're in this era where it's all quality. And I think that, you know, that's great for what Cook has done and says something about his legacy. I think what that next product is going to be hard to define, because we're kind of in a weird space where everyone's talking about glasses or pins or whatever. The smartphone is still going to be at the center of all that. So where do you go from there? We've seen, you know, attempts, the Vision Pro, not so much. I think VR is kind of kaput as far as everybody's, you know, kind of concerned. Meta cutting that whole division down to, you know, the knees. And, you know, I think it'll be interesting to see what Apple can cook up, if anything, that will top the iPhone.
All right. A+ for Tim Cook from Dan Halley, who is not an easy grader, I might add. Dan, thank you. All right, let's get some more expertise and insight on Apple's 50-year anniversary. Joining me now, we've got Sarah Kunz, Managing Director at Clio Capital, and Gil Luria, Head of Technology Research at D.A. Davidson. And welcome to you both. Gil, I'll start with you. Apple turning 50, big day there in Cupertino, Gil. Interested to get your thoughts, Gil, on what's the big reason, or maybe there are, you know, multiple reasons, Gil, you would chalk up that sort of just explain why Apple, Gil, has continued to survive and thrive, even when, you know, many of its tech peers have not. How do you explain that, Gil?
I would chalk it up to an obsessive approach to delighting consumers. I mean, those are words every company uses, but Apple actually does delight its consumers, and always has, especially since the era of iPhone, which is almost 20 years ago. They've created, because they make everything from the chips to the hardware to the software to the service, they've been able to wrap around this experience for consumer that always works a lot better than the alternatives, and has learned about us and can create a seamless experience for us. And it's habituated us that way by delighting us. And it's not a coincidence that you're on a MacBook, I'm using a MacBook, which is tethered to my iPhone, as I look at my watch, and everything just works seamlessly. Nobody's ever been able to accomplish that. And they've also maintained quality, which is how you get that very, very valuable brand. So those are things that are much easier said than done, but Apple's been executing on that for 50 years now.
Sarah, my buddy Gene Munster, longtime tech analyst, smart guy, he said this on X today. He said, Sarah, Apple's greatest product, he said, wasn't the iPhone. It was the culture that Steve Jobs built to outlast him. What do you make of that, Sarah? You agree with Gene?
I think that you certainly can't, overstate culture. We've seen in these sort of long haul companies that if you get the wrong leader in, you can have a tremendous head start, but you really fall off a cliff. And Apple has certainly had its, sort of moments of despair, but for the most part, it has stayed true to making a few things really, really well, delighting the customer, and it seems to still be working.
Gil, there is some criticism in some quarters. You'll hear this, right? Goes something like this, that Apple is, lost its innovative edge, right? Evolutionary, not revolutionary. Haven't had a groundbreaking product since the iPhone. Fair criticism, Gil, or no, investors are missing something? What do you make of that?
I think it's somewhat fair because the iPhone that we're using right now is really not that different than the iPhone 12 from 5 years ago. So there's been very, very small incremental improvements there. Going forward, that's not going to be enough. You had a great conversation with Dan just now about what's next. Well, we know what's next. What's next is a foldable iPhone. What's next is a pin, and what's next is still, for as skeptical as Dan is, some spatial computing device. And the reason that's all going to happen is that the user interface is going to change in the era of AI. One of the things that the iPod and then the iPhone revolutionized is the touch controls, right? That's what we got with the iPhone, which is so compelling that a 4-year-old can use it. Maybe they shouldn't, but they can. And that's going to change now. We're going to interact a lot more through chat, which is either type chat or voice conversations with these devices, which may shift us away from the handset form factor to a pin. While in the meantime, we're going to have foldable to increase the display size. We're going to have some type of goggle or glasses to change how we get displays. So innovation is going to become even more important in the next 10 years. And Apple needs to be there. It doesn't have to have the products first. It usually doesn't. It lets others innovate, but it needs to have a quality product that follows along those lines. And again, the big test is this year to see how good the foldable iPhone is and what price point they pick for it.
Sarah, I also want your take on Tim Cook. I was talking to Dan Halley about it, got his thoughts on his leadership. I'm interested to get your take. What kind of grade you would give him?
I think that Tim has done a good job of sort of maintaining. The question obviously is going to be, is that enough? I think you look around and you say, look, Apple is exactly where we all want to be at 50, right? Sort of wildly successful, universally beloved, had Paul McCartney playing at its birthday party. But where do you go from here? And obviously in the next kind of handful of years, there's also going to be a big question internally of who can take over from Tim and not just sort of maintain, but really innovate. And whatever form that takes, we do know that we're probably at the start of a new form factor cycle over the next decade or so. And so I think there are really big questions for, yes, Tim has been great, but how good will he be at grooming the next CEO and also handing it over gracefully?
Gil, same question. I was texting with a friend of mine, longtime Apple analyst, and I was saying, what do you think is next for Cook? And he said to me, texted me, he said, I think Cook steps down in the summer of 2028. I said, okay, that's pretty specific. How come? He said it because Cook is the Trump whisperer. He knows Trump. He has a good relationship with Trump. He's going to want to see this administration through, but then he steps down. I guess I'm curious to get your take on that. And also, Gil, who you think will take the reins from Cook?
So I want to pick up on what Sarah said. I think Tim Cook's done a great job maintaining what was handed to him and dealing more with non-product topics like how big of a dividend, how many share buybacks, how to push margins forward, to your point, how to interact with the political class at a time where that's been absolutely critical, how to manage the supply chain. He's done a very good job managing that process, and maybe that does expire at the end of this current administration. But the next level, again, will have to be product innovation. On the form factor side and on the AI side, we keep going back and forth between, is it good that they stayed out of the AI race? Is it a bad thing they stayed out of the AI race? At some point, whatever device and whatever service they're providing us is going to have to be AI integrated and AI native. And that's the challenge for his replacement. I don't want to speculate too much, but I always think it's a good sign to see who has a speaking part during Worldwide Developer Conference in that video. That usually tells you who's at least in the running.
That is a good tip. I like that, Gil. Gil, Sarah, thank you so much. Appreciate it. Coming up, we're continuing the festivities for Apple's 50th anniversary. That's next. In the 50 years since Apple's founding on April 1st, 1976, the tech company has redefined personal tech through a series of groundbreaking products, from early computers to iconic devices like the iPhone and Mac. Its innovations have shaped the direction of the digital age. For a look at what could be next for the tech giant, let's welcome in now International Data Corporation's Ramon Lamas, along with Yahoo Finance's Dan Halley. Welcome both. Ramon, I'll start with you. Maybe just big picture, Ramon. Apple turns 50. You've covered this industry, Ramon, a long time. Covered Apple a long time. I'm just curious what you make of that milestone, Ramon. You know, what you think explains the enduring success of the company.
That's a great question because, if you look back in the history of tech, let's face it, not every single not every company has made it. A lot of them got acquired or, fell by the wayside or anything. But I think within the Apple's case, I think they cling to their North Star, which is to design products, services, and experiences that just plain old delight the customer. And you can take that approach across, many of their different devices and services and applications, and they've been successful with it. So, to that, I tip my hat to them. Job well done, Apple.
Let's spin ahead, Ramon, now. There is widely seen, there's this criticism you hear, right? Apple has fallen behind in AI. Curious, one, do you agree with that? And two, if you do, Ramon, how wide is that gap with rivals?
That's the funny thing about Apple. In very, very few instances is Apple going to be first to the market. And they're very willing to let many other companies suffer the slings and arrows of missteps and mistakes, and then ultimately come out with something that's going to be, pretty darn close to perfect. Okay, so I think when I take a look at where Google is, when I take a look at where Microsoft is, I think Apple is taking a look at what they're doing and what they're seeing, along with a whole slew of other companies, and saying, this piece makes sense. This piece needs to be, twisted and turned and developed in a different way. So I would hope that, that whereas the past 50 years has been, Apple's been very much a devices and experiences type company. I think it's going to become also one of the other, AI first type companies. I think within the next, several years, you're going to see them, catch up. And then in the next generation of years after that, you'll see them perhaps even move ahead.
Dan, Apple is partnering with Google Gemini, right? Mm-hmm. Smart strategy, in your opinion?
I think it's the only strategy right now for them. They're doing kind of a two. There's been a report from Mark Gurman that they're going to have a multi-AI kind of agent strategy, and that they're kind of doing this with Google and OpenAI, right? If you open up Siri now, you can ask either ChatGPT or Siri a question. Usually you're not going to get very much out of Siri, but then you'll have this Gemini offering, and it'll be built in to Apple's foundation models, and you would just use it as you would anything else. And it would be similar to what you do when you do spotlight search, where you pull up something and you don't realize that it's actually Google that's powering that search in the background. It's going to be the same basic idea. Look, I mean, I don't think they necessarily have to go out and start training models and having billion parameter models that they themselves run. They didn't get into the search game, and they did fine, right? They make money off Google being the base search for the iPhone, for the Mac, right? So I don't know if they necessarily have to go into that, but if they start to see other companies kind of doing different interesting things with AI, then they're absolutely going to have to have their own kind of model, unless they're able to make similar deals with what they're doing right now with Siri, and leverage that to kind of keep pace with the Googles, the Pixel phone, the Samsungs, things like that. It is interesting though, because they're going to be using Google's models, but then their biggest rival, Samsung, also uses Google's models for their smartphones. So they're both going to be running on similar software at the end. What would you expect to hear, just spin ahead now, we got Dub, the big software show, that'll be here soon. What would you expect to hear on that stage? I mean, hopefully we get the new Siri. That's, the big thing that's kind of been the albatross around their neck, where they haven't, they were supposed to launch that last year, never showed up. They had those commercials originally saying, "Oh, where do I know this guy from?" The actor from Game of Thrones and Last of Us was in it, and it just kind of disappeared. And so I think that's going to be the main thing. I think showing off where AI fits best for Apple will be an important aspect. You see what Microsoft does with Windows, and it feels a little like they're cramming too much AI in your face. With Copilot there, it's clearly it's something that they want to show off. They've made this huge investment, but you can also make that money on the enterprise side. The consumer side, I think it needs to kind of fall into the background a little bit, and Apple's very good at that. It'll surface some things, but it never feels like it's taking over the main experience, and that kind of feels like what Microsoft's kind of run into. I feel that way also about when you use certain Google products. I keep getting if I send an email, it's the Google suggestion right out of the gate. And it's like, look, man, I don't need Google sending my emails for me. Let me send this in the way that I want to. So I think Apple is very good at that. I'd like to see them add more features. Obviously, everybody does. But ensure that it stays in that background area.
Ramon, I'll end here with you. Product pipeline, Ramon, listen, Apple doesn't tip its hand like some rivals, but rumors and reports of an Apple foldable. Ramon, what do you think? You want to bet that? Is that foldable coming in the fall?
I think it's going to be coming out in 2026. We talked to the other analysts we have around the world, and talking to a number of other players throughout the market. I think a foldable iPhone is pretty much inevitable. Okay, it's a question of when, and we've asked that question for the past several years. But from what we hear and what we see, 2026 seems to be the year. The question for me is, okay, now that you have a foldable, what can I do with it? Okay. And am I going to just be looking at, videos, watching YouTube, watching Netflix, or, am I going to be able to be, a bit more productive? And how much of a role is AI going to play in that? Because that's, it's one thing to have the hardware, and the hardware is definitely going to get people kind of through the door. But it's the experience that keeps them coming back again and again and renewing and refreshing, every couple of years.
Ramon, Dan, great chat. Thank you guys. Appreciate it. That's a wrap on today's show. Thanks for watching.